Hello everyone. EFGH rules of investing, even Buffett's follow. This is an educational video by which I want to share my experience of over 2 decades. It will be beneficial for investors in any market, for investors of any age, and for investors in any profession. I'm a SEBI registered research analyst with a wide experience of more than 25 years in international and domestic markets like stock, currency, bullion, and commodities. I have helped set up a futures and options segment for about 2 dozen brokerage houses in Delhi. I am advisors to corporates for forex hedging needs and HNIs for investment needs. The idea behind this and subsequent sharing of experience would be to make anyone and everyone become a good investor in the easiest possible way and in shortest possible time. When people talk about a market, say stock market, they normally say two things. First, you can make a lot of money in it. Second, 90% investors lose money in it. Both the notions are true, but by following simple EFGH rules, one can be in the category 1. Investors lose money not because they are small players or lack information or are not professional investors and traders. Even big players lose a lot of money. Information can be acquired and professionals can be hired. But even then, people can lose a lot of money. There are instances where even Nobel Prize winners in economics trading in financial instruments had gone bankrupt. They lose money simply because they do not follow simple EFGH rules. My grandfather was a very successful doctor in a small town, and he was our Warren Buffett too. He made huge money in the stock market over years, even when Sensex was under 3,000, 20 years back, without paying much time to the market. There was no internet for him, no reading of magazines, no professional guidance, just some investments made with common sense and the EFGH rules followed. Profit or loss from financial markets is a zero-sum game, which means that profit of Mr. X is loss of Mr. Y. Exchange takes money from loss maker to give to the profit maker. Playing in the markets is more of a mind game than about the money or information you may have. If one is able to follow this one line and does not follow the crowd, then that person will end up in the category of Buffett's. E stands for emotion. My grandfather bought blue chip shares, but he always sold some of them when the prices were up and there was a reasonable profit, buying them back when the prices fell. We should not be emotionally attached to our investments so much that we do not even book the profits. We should periodically monitor our holdings and trim or add as per a plan. F stands for fear. At the time of crisis, artificial or otherwise, prices fall steeply, and all around people appear to be selling or cutting losses in panic. This is the best time to buy. All the Buffetts buy when everyone is selling, and whenever there is fear of huge losses. My grandfather did the same. These are the times when you will get stocks at the cheapest price. G stands for greed. Frankly, even my grandfather could not control greed. But eventually, in time, he would realize the fact that market is giving him opportunity to sell at a premium, and he would sell in installments. The time when everyone wants to buy is the correct time to sell. H stands for hope. People who somehow feel that they have bought stocks at the peak, and despite all the indications that tell them that the prices will fall, yet they still hope that some miracle will happen and they will be able to exit at their buy price or above, they are the ones who end up making big losses. My grandfather always felt good when he either sold at a profit or sold at a stop loss point. Accept when you are wrong and exit. When 25 years back I was taught these rules, I found them to be good, but wanted to learn more complex tricks. And after decades of making and losing money, I feel that the best tricks are very simple. And ironically, we normally ignore them. No one taught these EFGH rules to my grandfather. He just kept things simple. That's the trick of Buffett's. By Buffett's, I mean all the renowned investors of all time.